What's up, everybody? Welcome to another episode of the Bag Talk Show. Today, you have to stick around to watch this entire episode because we're going to tell you why we personally think the stock market has not bottomed out yet and why you need to have enough cash ready in 2023 to take all the advantage that you're going to find out about in this episode. So let's get started. Well, without wasting any time, share your screen and let's tell them what we got.
Oh yeah, they don't even know what's coming to them, bro. So first of all the links that we're sharing today will be available in the description box. So make sure you check them out because there's a lot of gems in there. Now, without further ado, bro, first of all, when it comes to the stock market, we know that they've been reacting off of interest rates. Because what does the Federal Reserve do to get down inflation? They have to raise interest rates, and that's been killing our portfolios. I'm sick of all the red, and so everybody's been waiting for the Federal Reserve to pivot, which means that they're going to do what? They're going to lower interest rates. And people think that, as soon as the Fed lowers interest rates, the market's going to go crazy bullish. We're going to make all our gains back and everything's lit. But it's not necessarily the case right away. So as you see in the title of this article, for example, they say the Fed pivot to lower interest rates will be bullish for stocks, but you have to time it correctly because the market typically doesn't bottom until after the Federal Reserve has reduced interest rates. And so now if you see, even in the article, they point this out. They say there have been 13 major pivots over the past 70 years. Okay. And only in 5 of those pivots did the stock market bottom in advance of the move, meaning in advance of the pivot. So that in this case, right, the pivot hasn't happened yet. So yes, there's a chance that we could have bottomed already. But if you look at the numbers statistically, about 62% of the time, the bottom comes after the pivot, okay, after. So we're going to go along with the major in the stat, right? We're not going to go with the minor in the stat. So we're going to kind of err on the side where, all right, the bottom will probably come after the pivot. And so, first of all, I need everybody to have their money ready because it's literally baked into history to where the bottom should be after the pivot. And we expect that pivot to come in the later parts of 2023, and we're going to show something for that. But Nusky, I don't know if you want to.
Yeah, so I think one of the biggest things y'all have to understand, and we're saying a lot with the pivot, right? There's 3 things that you have to understand. 1, the stock market usually goes up or down based on inflation and interest rate, like we explained, and it's been going down because we've been doing the first part of the pivot, which is when the Fed comes around and does quantitative tightening, where they stop putting money into the economy and they just increase interest rates. That's the first part of the pivot. That's the first stage. The second stage is essentially when they say, okay, we see inflation is starting to come down. We might have already hit the top. What we're going to do is put a pause on increasing interest rates. We're going to start decreasing interest rates. That's what we just saw happening, right? So the first part is done when the Fed was going in and going crazy, bro, with the 0.75 4 times in a row. Now they just came around and said 0.5. So we see the second stage of the pivot already happening. Now, what we have to do as investors based on what we just saw right here is you have to see what the Fed does. Does it continue to increase interest rates at a lower pace, like from 0.5? Does it go to 0.25, right? What happens? Because that's going to give us a sign. But then the third stage of the pivot is what happens, is what we're going to talk about, is when the Fed says, we will now start decreasing interest rates, right? And that is when, was literally what he just mentioned, when they reduce interest rates, it does not mean the stock market has bottomed yet, y'all. So you have to be careful. But we found this dope website, go ahead, you can go to it, which kind of shows you projections on what's going to happen, right? So right now, the schedule of the Fed, they're done for this year. 2022, Jerome Powell has caused enough pain. Bro said, I'm out of here for this year, right? I'm not going to speak no more. I scared y'all enough. 2023, this is what happens. So as you see, you got February, March, May, June, July, September, November, and December. Raul, can you click on February already?
Yeah, February, we here.
So if you guys look right now, this is something you guys have to pay attention to. This is the gem part. So make sure you're listening. Right now, where you see current is 425 basis points to 450 basis points. All that means is 4.25 to 4.5. That's the current federal rate. Now, what they're saying is projection-wise, what's going to happen is in February, most likely it's going to go to 4.5 to 4.75 because it's 33%. You see how REL's like hovering? That is what is most likely going to go to based on projections. So yeah, we're not increasing as heavily because we're still in the second part of the pivot. REL, do me a favor, bro. Go up and go to, you guys have to keep up here. March. Look what happens to projections. Now we're at 55% chance that's going to be 4.75 to 5%. So we're still going up, but just not at the same crazy pace. So still in the second part of the pivot. If I'm not going to keep it crazy, just go to June and July, bro, whichever one you want. So June, if you scroll down, and now we're still at 4.75. So notice, REL, what is happening? Are we increasing, decreasing, or are we staying stagnant?
They paused it, yeah, staying stagnant. They kept the rates high, but they didn't go over or under yet.
Exactly. So y'all, remember, now this is technically starting to be good for people because like, yo, they're not increasing. They're projecting that it's going to stay stagnant and inflation's coming down. This is when things get interesting. Let's go to September, bro. Look what happens, y'all. All of a sudden, it's a projection that, yo, there's a 34% chance that we might be at 4.5 to 4.75. Boom. If I do my math correct, I see everything that's happening. Now we're going to start decreasing. But what did REL just tell you guys? Just because we're decreasing does not mean we've already hit the bottom. The bottom usually comes after. So in September is when we need y'all to have your money ready because you guys will see so many opportunities. Real estate will go down. Crypto is going to be down. Stock market is going to be down. This is why DCA is so important in 2023 because y'all, if you guys listen to us, 2022, 2023, you DCA, you will be on your way to being a millionaire. Y'all have to do this for your future selves and for your family, bro. So this is what we want to point out to you. REL, add anything you want if I'm missing anything.
Yeah, and I would say like, yes, we DCAing, but then also definitely have a reserve sitting on the side so you could take major advantage, right? Major advantage of the bottom that should be coming in the later half of 2023. And as well as the fact that everybody thinks crypto is dead, but I just wanted to highlight, listen, when the stock market bottoms in the late side of 2023, that is when you need to dive into crypto. You know why? Because as we said in this article, guess what? It will be bullish for stocks. You just have to time it right. So after the market bottoms, it's going to have a crazy rally after that. So you could pretty much target, let's say early 2024 to say like, yo, the stock market will start to move back up and then things will be trending upward. We're entering the new bull market in 2024. Guess what also happens in 2024? The next Bitcoin halving event. And anybody who follows crypto knows that after Bitcoin has a halving event, it goes up, but it doesn't go crazy. But shortly after that, some months after that, Bitcoin goes ballistic. So you can more so target the later half of 2024 for Bitcoin, which will lift up the entire crypto industry to go ballistic. So I need you to get money. This is my opinion. This is what I'll do. Excuse me. What I'm going to do is I'm going to get money heavily into crypto in the later half of 2023 with an expectation that it's going to explode on the later half of 2024. That's for crypto. So there you go.
That's perfect. And listen, y'all, this is all something that you guys should really consider. This is not, oh, go ahead and do this. Obviously, consult with your CPA, consult with your actual advisor. Don't listen to us because we're just obviously random people. You know, we don't, y'all don't really know us, but that's what we would personally do. We're not your financial advisors here. But at the end of the day, this is what we want to put you guys onto. You're not a random person in terms of, I'm just going to go ahead and listen to the average person, right? And listen to all this social media news. No, you listen to Bag Talk, which means we do all our research for y'all to let you know exactly what's happening right now. So if you...
Y'all see it there.
Facts. Literally facts. So if you like this type of episode, make sure you please do us a favor and like, comment, and subscribe. Plus the little notification bell because we drop
2 videos a week.
And you don't want to miss them. We appreciate you. Make sure you check out our episode on Wednesday. But until then, peace.
Peace.
Soundstripe.